Hi, this is Chris Anderson with RE/MAX Premier Choice. I've been a residential realtor here in Central Ohio for 2 decades now, and it's very important that as a home buyer, you select the proper lender. Today, we'll talk about that process. Today, we're speaking with Dave McKee, a 30-year industry expert in lending and also former president of the Ohio Mortgage Bankers Association. Dave, what's the first thing you look at when determining how to work with a buyer?
The first thing we do with a new home buyer basically is have a conversation. Just find out what their goals are, their family history, what time job they have, down payment requirements, and everything is basically suited for their individual situation.
Can you tell us about credit scores, job history, and the other major factors involved in obtaining a loan today?
The important factors in a loan approval is basic and employment history. Have you been in the same field or recently graduated in the last 2 years? The down payment, the credit score, your liabilities. Basically all that goes in your loan approval. The higher credit score, the cheaper your monthly payment. The lower credit score, the more expensive your monthly payment. So the credit score is very important in the mortgage process. Number one, we need to pull your credit report to make sure what your credit score is. Your credit score influences your monthly payment. It may influence the product that you get, whether it's conventional or FHA. Also, if you call us early, we may be able to suggest things that you can do to improve your credit score. If you are going to buy for 3 or 4 months, we can probably increase your credit score if you're willing to work with us. Basically, 640 is probably the minimum, but again, we can influence your credit score if we have enough time before you actually want to buy a home.
How about the various types of loans, FHA, VA, and conventional, and how much is needed down for each program?
There are actually different types of mortgages that you can apply for. There's a VA loan, which you normally have to be a veteran or someone in the National Guard or the Reserves. The down payment is only 0 down, so there's a lot of advantages of that program. FHA, the minimum down payment is 3.5%. The FHA doesn't care as much about your credit score. Your mortgage insurance premium is the same regardless of your credit score, and it's a great product. If you have a higher credit score, the conventional product is probably more advantageous to you. If you have a bigger down payment, it goes from 3% all the way down to how much you want to put down. That's an advantage to you if you have a higher credit score. One difference between a conventional loan and an FHA loan, the down payment's almost the same, but the mortgage insurance premium / private mortgage insurance are different. An FHA loan will require you to have the mortgage insurance premium for the life of the loan. So if you live in a house 15 years, you're going to have that MIP on the loan for 15 years. The conventional loan, it will automatically drop off at 78% of the original purchase price. You can petition it to drop off if you make major improvements. After 2 years, they can drop it off after 20% down, where you have 20% equity, and it's based on your on-time monthly mortgage payments. So there is a big difference between the two. If you qualify conventionally, we probably would suggest that you go that way.
And finally, what's the difference between being pre-approved and pre-qualified?
The difference between a pre-approval and a pre-qualification, in our opinion, a pre-approval is probably based on a phone call. They do pull a credit report, which is required, and we'll basically say you should qualify for this house. A pre-qualification means we actually document everything. We document your income, we document your down payment, we verify your employment history. We make sure you really can buy that house. Realtors normally like to have a pre-qualification letter because they want to make sure that you really can buy the house that you want to buy. And one additional thought, when you go out to pick a lender, you want to pick someone that you know will communicate to you, communicate to the realtor. But a lot of borrowers will pick the lender based on rate through an online web search or whatever. That may be important, but if they don't deliver the loan in time, you can't buy the house, everybody's upset. We think it's more important to deal with somebody that is a partner with your realtor. They communicate to everybody involved. They meet the timeline, and that's much more important than rate. And sometimes the rate that you see on the internet isn't really what you get. they hide certain things. You have to go through all the fine print at the bottom of the screen to make sure you're really comparing apples to apples.
Thanks for joining us. Be sure and visit my website at chrissellscolumbus.com or call me at 614-563-HOME with any questions. See you next time.